Repeat the steps for the 30-second model. Sure. Okay, so let's see if I can find the steps from yesterday. John, I'll go into your question in just a second. Or it wasn't from yesterday. Does anyone have the steps for the 30-second model that I posted in here? I'm trying to find it in the chat. Okay, here it is. Awesome. Thank you, Kate. Okay. Thank you, Douglas, too. Awesome. All right. So what is the higher time frame bias? That's what we start with. Well, the higher time frame bias is bullish. Okay. We were still expecting, like what we talked about this morning, for on a weekly, a monthly, a weekly, a daily basis for a price to continue working higher. Okay. ES had yet to meet the weekly objective. So if I go to a weekly chart on ES, we are still expecting for price to trade from some discount array, here being the bullish order block, to the buy side liquidity above the prior week's high up here, which is where it's reaching toward right now. Okay. So we have a higher time frame bullish bias. That's the first step. Okay, the second step is identifying your draw on liquidity from the 15-minute perspective. All right. And I say 15-minute, but it doesn't have to be 15-minute either. It can just be whatever high has formed ahead of the entry, as long as you still have an area to draw to. So on ES, we're expecting price to draw higher. On the 15-minute chart, I can see where the swings are that it can draw to. So it can draw up to this high here. Just gonna make these black. That high. We have this high, and we have this high, and then we have the buy side liquidity up here. Okay. So I'll mark that high here as well. That was formed at 10. So that's our potential draws on liquidity ahead of that move happening. All of the swing highs that we can identify on the 15-minute, since we're expecting price to go higher. The third step is wait for a drop into some discount array if bullish. We're bullish, so we're waiting for price to drop to a discount array. So I go back to the 1-minute time frame, and you can see here, this even offered another entry here on before that 10 a.m. news release. You're going to have more volatility into the 10 a.m. news, so if you can weather that expectation, then you can be an earlier participant. So you had this buying opportunity that was right here on ES inside this BISI right there. Okay, so even that is your, let's see, with 30-second, that gives you a 30-second model there as well. So I'll go over two of them right here. So wait for price to drop into a discount array if bullish. That's the third step. So we're looking at our dealing range, which will take the lows that have formed down here up to the highs and find equilibrium. So that's equilibrium right here. So anything below that, we're looking for a discount array. All right, well, let's see what potential things there are down here. You have the last down close candles here within that price range, so that can be a discount array. You have inefficiency that exists within here. On a 5-minute chart, you have a BISI right there as well. So any discount array, anything that it drops down into inside a discount of the dealing range, that's all it needs to do. So return down into a discount, into some array. Okay. Step 4, wait for a 1 or 5-minute swing low to be purged if bullish. So here, swing low, purged right there. Okay, so you can see how these lows are run out on that candle right here. See that? Okay. And then the next step, wait for a candle to close up if bullish. So the lows are run right there, and we have a candle that closes up right here. All right, there we go. So now we're good to go on to step 6 and look for the 30-second fair value gap. So I go down to a 30-second time frame and see, is there a fair value gap on the 30-second chart? Yes, there is, right here. See that between that candle's high and that candle's low? You have a BISI right there. All right. The next step is you buy it and you put your stop loss under the low and target buy side liquidity. So you enter here, put your stop loss here, and you can target these highs, the buy side liquidity above here, and above here. So if you have only one contract, then you could target these highs right there. If you have one, if you had another, you could take a partial here, you could take a partial here, you could take a partial here. Okay, that would be your trade there on the 30-second model. Then we're given another opportunity here because we still have our higher time frame objective being the buy side liquidity up here that had yet to be met yet. So I'm going to take off all of these that were purged already, right there. And we'll go back through the steps again. So we still have buy side liquidity above this high because we still have this objective. This is where we're reaching for on the weekly chart, the previous weekly high. So until that is met, we can still expect that price is going to go higher. It hasn't been traded to yet, and so we still have the expectation that price can go higher. So we go back through the steps again. What's your high time frame bias? It's still bullish. Step 2, identify a 15-minute draw on liquidity. Well, we still have that swing high up here, so that will be your draw on liquidity. And you have a new swing high here as well, so that can be your draw. Step 3, wait for price to drop into a discount array. Okay, well, let's look at the dealing range. So we've got the low that formed and the high that formed. And here's equilibrium. So price returns to a discount below that level. All right, and comes into a discount array again. So in this case, you have, it refers back to the same inefficiency that we had here, the 30-second right there. It also comes back into the hourly SIBI from before, which we're utilizing as inversion now. It also comes back into the last down close candle right here and into the rejection block down here, which is this swing. So it doesn't matter what it is, you just have to see that it comes back into a discount and into some PD array, whatever stands out to you in the charts. It could be anything. Sarah, the range is just whatever the most recent dealing range is. So we're just gonna find wherever we have a swing low and a swing high. So I'll just go down, and we're looking at the most energetic price run. So like here, I'm on a 1-minute chart. The run starts down here. So even though we have a swing low right here, I'm going to use this swing low. So we have that swing low, and then we have a swing high up here, which is the highest one. Whatever the most recent dealing range is. Okay, it drops back down. Yep, 1-minute dealing range, or whatever dealing range you're operating from. If you're looking on a 15-minute chart, then you could have a different dealing range. So here on the 15-minute, it would still come back into a discount in the 15-minute. You'd have whatever swing low was formed. So you have a swing down here. You have a swing down here as well. Let's just take this one because it was formed ahead of that drop. So there up to the high that was formed. So swing low, swing high. and it returns into discount right there. No, it doesn't need to be the full daily dealing range. If you use the full daily dealing range, it doesn't necessarily need to come back that deeply in order to reach the target, and so you may not find entries too frequently if you're using that daily dealing range. Just whatever the most recent one is. You can use your 15-minute chart or go down lower than that. 5-minute, 1-minute, whatever, as long as you find whatever the most energetic price run is. So in this case, we're looking at this price run here on the 1-minute chart. From this low to this high. All right. And there's your discount. So anything down here is discount. Anything below equilibrium. Okay. So we make the initial run up there. We still haven't met the weekly objective up here, which now you're getting another run on stops right there. So you can see another run begin off of this and reach for the buy side here, here, and up here. So that's a turtle soup entry right there, by the way. See how it drops below sell side right there and candle closes above? That's a turtle soup entry to target the buy side right here and up here. Okay. Back to the 30-second model. Discount, it drops back into discount. Now we need to see it run out a swing low. So right here, swing low. You got a low right there with a higher low to the left, higher low to the right. So you have a swing low, and it's purged right here on this candle. Next step is to wait for a candle to close up. So right there, we get a candle that closes up. We still are bullish, and there you go. There it's reaching into the buy side, and it should go for here next. 30-second chart. We had the candle close up on the 1-minute, and then 30-second fair value gap right there. Okay, so there's your entry. Enter. Stop under the low. Target buy side liquidity. So you can target here as your first target. That'll get you 5 handles. And then you can target the buy side up here, which is reached right there. And you can target the buy side up here. Okay, so there's a few examples of that this morning. You can see that model happens multiple times each day. There's plenty of opportunities. No scarcity of opportunity. Ranjan, the liquidity taken turtle soup is important. Yes, it is. That's a crucial step. Before you see the candle close up and before you see the 30-second fair value gap form, you need to see a swing low that's run. If it doesn't run a swing low, the model isn't there. So you still need a draw on liquidity that hasn't been met yet. You need to see it return into discount, and you need to see it run a swing low on that 1 or 5-minute chart. I think you had a question from before as well. What gave you the clue to go long? So I'll pull my chart back up and show you. So this is what we were looking at this morning. I'll just start the analysis from scratch here. So we still had, NASDAQ had already purged the weekly highs, okay, from back here. It had already purged it. So I wanted to be a bit more cautious this morning, even though the ES had yet to purge the weekly highs. And so I was still expecting higher time frame order flow to be bullish, but I wanted to see what framework could we use to reach up to those highs. Okay. So I started with the hourly chart because it was the highest time frame inefficiency that I saw forming to the downside. If you go to the 4-hour chart, there's nothing. Okay. If you go to the 1-hour chart, then you have a SIBI right here. Okay, there's your SIBI on the 1 hour. All right. Now, if we're expecting price to likely continue going higher, the best buying opportunities on a bullish day are going to come at or below the midnight opening price. Okay? So anything at or below the midnight open is presenting a buy if you're expecting price to go higher. I'm just waiting for a framework that's telling me all this action below the midnight open is manipulation to go up here. And that's why I'm waiting for the specific entry model and bullish signatures that we discussed before to take it up into the buy side. Could you find a buy that's just already down here? Yeah, you probably could. So like, let's look at a swing low up to a swing high. And we return perfectly to discount. So you could be a buyer right there, right at discount. Okay. You could be a buyer right there. That's another signature already that we can use to start telling this morning that we may continue working higher, because we're looking at the swing low down here for the most energetic price run up to the swing high, and we return to discount and show beautiful respect for it. See, we tap discount, we don't even go too far beyond it, and you can see that immediate response off of it. Candle bodies closing well up into the range and then starting to work higher. As I go down into the 30-minute chart, nothing there yet. Let's go to a 15-minute. You can see right here, so we trade off a discount, and right here, we're creating new inefficiency to the upside. So we're starting to show indications that we're going to continue bullish order flow. Okay, we reached into a discount, we ran out sell side liquidity, we're creating new bissies to the upside. Trade into that there. Trade back down into a discount one more time right here. Low to the high. Coming almost just barely shy of a discount right there. Okay. And then we start to run off of here. See this again? There's another turtle soup. Drops below the sell side. We have a bullish expectation. See how it closes above sell side liquidity? Okay. And then we start working higher. Now, looking at the hourly chart, we wanted to see initially price go and close above this SIBI. That would give a good indication that we're ready to trade higher. The entry that I took was a bit premature to price closing above it, but it's because of the framework and bullish signatures that I saw in price. So I was expecting to see a close above it as we got into 10 a.m. Okay, I'll go to a 5-minute chart here. And what you can see is we still had buy side liquidity here and here. And look at how we've engineered all these relative equal highs. So you had these highs. It was left alone right there. And then we trade up again and create another high right there. Relative equal highs. Okay. Then we drop back down into this dealing range, back into a discount here, and trade into a 5-minute BISI right here. Right there. Okay, I'll make that green so it's clear to see. We're already showing, we already have bullish expectations. Okay, we had higher time frame order flow pointing in the direction of we're likely to go higher. We just want to see now, do we trade and close through premium arrays? Ideally on the same time frame as the premium array, but we're getting an early indication of it here through the 5-minute chart and the respect that we see for it here. Okay, we're trading below the midnight opening price, so we're at a discount relative to the daily dealing range. You're thinking about that daily candle in terms of the open. So it opens here at midnight. It creates the low, high, close. Okay, so midnight represents the opening price in the open, low, high, close. And so if we want to be a buyer, we want to be buying in the manipulation. Well, the manipulation is going to be the wick that's below the candle. So we want to be buying either at or below the opening price. So anywhere in here. is a buy. Anywhere inside this range. But we want to be able to frame it so that it makes sense in terms of our risk. Okay, so we're finding an opportunity where we've had a clear indication that price can trade higher and doesn't need to trade all the way back down here. Because I don't want to buy this right here and put my stop all the way down here. I could, but that's a really wide stop loss. Okay, so I'm just recognizing that this is all buying opportunity below the midnight opening price. And then I want to see how can we trade up to the buy side up here. Well, within this range, we drop back down into a discount after we've engineered buy side liquidity. So it still has reason to go up here. It's just dropping back down into a discount to offer another opportunity to accumulate long positions because it hasn't met the objective yet. Until the objective is met, every move down is just manipulation and another chance for accumulation before going higher. Okay? Drops down into not just a random spot, but the 5-minute BISI right here. So it's returning into inefficiency that exists below. And it's going back below the midnight opening price to offer another chance for accumulation and below the 8:30 opening price, which is this blue line right here from 8:30. Okay. 8:30 is the opening price for the AM session. And so just like we think about the open, low, high close of the daily with the midnight opening price, we think about the AM session with the 8:30 opening price. Okay, so that anything at or below 8:30 is another opportunity for accumulation on a bullish day. All right. So drops back down, back into the inefficiency and into the 8:30 opening price. We already have a framework of this could go higher from here because we're engineering buy side liquidity, we're trading and we're closing above, and here we're really nicely respecting the high end of that hourly CIBI. Okay, right there. See the candle bodies here? Okay, and so now I'm just looking for some more bullish signatures that help me see price can trade higher. So down into a 1-minute chart now. It's dropping back into the 8:30 opening price, and it's coming back right up back into the range. So it's showing a hesitancy to close below the sell side liquidity. And so I'm already viewing this as a turtle soup setup that's just trading down into an inefficiency. So the even better buy than what I got would have been somewhere inside the inefficiency, like at the 8:30 opening price. I didn't get the best buy on it. But instead of buying it here, I waited to see if it could trade back up to above the sell side liquidity first, because I didn't want to be a buyer if this was just going to shred down into the liquidity resting below these lows down here. So I waited to see would price trade below the sell side and then go back up into the range. Sarah, can you repeat what turtle soup is there again? Yeah, the turtle soup idea. Basically, a turtle soup is just price returning below some low into a higher time frame area of inefficiency. So on your 5-minute chart, all this looks like is a fair value gap that price is dropping into. But remember, a fair value gap is a 3-candle structure, which means you need 1, 2, 3 candles. Which means on a fractal basis, the low that this candle forms is going to be a swing low on a lower time frame. So this is a 5-minute candle, and it creates a low right there. But if you go into, an inefficiency within a high time frame. So on a higher time frame, it'll appear as just a regular fair value gap. So on a 5-minute chart, let me clear this off a second so we can see this. This is your 5-minute chart. You see this fair value gap right there. Right? That's your BISI right there. You don't see a turtle soup idea in here. All you see is a fair value gap. But the turtle soup framework comes from buying sell stops. So as you go into your 1-minute time frame, this low here on the 5-minute chart, this candle right here, this 5-minute candle, that low right there is this swing low on the 1-minute chart. Because remember, price is fractal. So that 5-minute candle that forms and creates the high of the fair value gap has 5 1-minute candles in it. So here, 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 and here. These 5 candles are all that 5-minute candle. So it goes down and creates the high of the fair value gap. But the fair value gap isn't visited until this candle. So on a higher time frame basis, a turtle soup is just price going into a fair value gap. But on a lower time frame, it looks like the turtle soup, which is price dropping below a swing low with the intention to go higher, or above a swing high with the intention to go lower. So here, price is dropping below that swing low, and we're looking to buy it because we expect price to go higher. And we see the bullish signature here that price is ready to go higher, because when it drops below this low, you want to see where the candles close. You see it dropping below the low, and the candles are not closing below sell side liquidity. They're closing above it. So it's showing that this is just dropping down to allow for accumulation, allow for more buying to occur, to then go up here. Okay. So there's plenty of examples. If you go and look throughout your charts, find opportunities where you're trading into a higher time frame inefficiency, and then go down into your lower time frame. Let me see if I can find another one right here. Really, it's any time price trades into a fair value gap. So even right here is an example from London session. Okay, here's a fair value gap on the 15-minute chart. But when I go to your 5-minute chart, what you see is a swing high right there on the 5-minute. Price runs above it, and note how the candles are closing still below the buy side liquidity. So it runs above it, but the candles are closing below. See that? That's a turtle soup sell to take it back down to the sell side down here. Okay. But most important is that you understand the draw on liquidity. Again, the entry is the least important part. The most important is the draw on liquidity. So you need, before this happens, you need to know or have a good understanding at least that, I don't like to say no because there's not 100% certainty in everything that we're doing, but we're using the things that we see repeat by the price engine to get an understanding of this. If your expectation, let's say it as your expectation, is that price should trade lower, then when it trades up into that 15-minute inefficiency and above the buy side liquidity being that swing high right there and doesn't close above it, those are all bearish signatures showing you that price can go back lower down into these relative equal lows. Okay, it's the same thing here that we're seeing here on the 5-minute and the 1-minute. 5-minute inefficiency there. It's dropping down to a discount, and it's built buy side liquidity above. So it already has a reason to go higher. Now I'm just going to see if it confirms that with the bullish signatures. So it trades down into the inefficiency, back into the 830 opening price, so offering an opportunity to accumulate. You can already be a buyer right there inside the 5-minute BISI with your stop just down here under the swing. So you can buy that there and put your stop here like this. And target the highs. That's a trade right there from the 5-minute. Okay, the way I was looking at it was on the 1-minute chart here, and I was viewing it as the turtle soup setup. So I know that there's a 5-minute inefficiency here. It's dropping below the 1-minute low. It drops down into it here and then goes back up above sell side liquidity. So I'm seeing that it's hesitant to go lower. It's closing, it's going back up to close above the sell side right here. I buy it before the closing price because I'm anticipating that it's going to do so because I'm already expecting that it's going to go up here based off of the higher time frames and the 5-minute chart. So I buy it right there, but I only go in with part of my position size and find an opportunity to pyramid into the position. So I buy it initially right here, okay, as it goes back up. And since it's already traded down to the low end of the inefficiency and it's run out sell side liquidity, I'm not expecting it to go back down here again. So right when I buy it, I just put my stop under this low. Okay, and then I pyramid again here at the midnight open because the best buying opportunities on a bullish day are going to be at and below the midnight opening price. A better pyramid would be down here in this wick, but the pyramid I got was at the midnight open there. With your first buy, where'd you put your stop? I put it under this low right here. So I bought right there as it traded back up above sell side liquidity, and I put it under this low. Because I was expecting that it's not going to have to go back down below this low again. It's already traded the sell side of the full 5-minute inefficiency. It's already run out the sell side liquidity, and it closed above it. So I'm just buying it right there and putting my stop under this low. Okay. Then we start to trade higher. I'm noting this inefficiency here. And I'm pyramiding at the midnight open. I'm already expecting it to go higher. And then after I see this candle go and close above, that gives me a good confirmation at this point, again, that we are ready to go higher. Because this candle is doing two things. It's trading and closing above this CIBI, which is another bullish signature, showing the price can go higher. And it's creating a short-term low. As long as this next candle doesn't trade back below this low, then you'd have a short-term low here because you have a low with a higher low to the left and a higher low to the right, which means that this is an intermediate term low. So an intermediate term low is a low where you have a short-term low to the left and to the right. So here's a short-term low and here's a short-term low. So the intermediate term low should hold in place until my buy side objective is met. So until these highs are reached. So now I'm comfortable with my stop below this low because it has no reason to go back down here after this short-term low is formed until buy side is met. So stop is here, pyramid at midnight open, selling through the buy side and this buy side there. Okay. And then price drops back down again, comes back into the CIBI right here. So utilizing that as inversion. You also have a very small inefficiency here that it comes back to revisit. See that? Back into a discount of the dealing range from this low up to this high. Into a discount. Candle closes higher right there. This would give you your 30-second entry again. So if you wanted to go back in, you could wait for that candle to close higher, see the 30-second BISI, and you could be a buyer again right there. Inside the BISI with a stop down here and target this high. And you could do some standard deviations too if you like. So let's just use this full range and get one standard deviation. So you can target there. So here and here. Yeah, Rosemary, whenever there's two fair value gaps, you allow for both of them to trade with your stop loss. So I'm not entering here and putting the stop loss here, but you enter in the first one and allow for both to trade with your stop loss. So you can enter here with your stop down here. Okay. Any other questions on that from this morning? Let's see, did ES reach the objective? Not yet. It's getting there though. It's working up there. So you can see that turtle soup idea again here on ES. Here was the first one, right? Or you had one down here initially, that's your turtle soup, dropping below the sell side but not closing below. Okay. Again here, right there, to reach up into buy side liquidity above these highs and this high here. And again here, right there. Okay. And you're forming that intermediate term high again, or intermediate term low again right here. So you have a low with a short-term low to the left and a short-term low to the right. And so until the buy side objective is met, we can expect this low to hold. So when we start seeing price displaced again here, we can be a buyer there with a stop under the intermediate term low and expect it to trade up into the buy side here and here. Thanks, Bob. Good, Sarah. So yes, this is recording. Terry, this is so helpful. Awesome. I'm glad to hear that. Stuart, want to study your setups? Yeah, sure. Okay. So now NASDAQ has gone and reached above the buy side. All right. All of the weekly objectives have been met. And so while NASDAQ can continue to go higher, I don't have much in terms of expectations for NASDAQ at this point. We can find as it engineers more liquidity throughout the day where it's likely to reach to. But from a higher time frame perspective, it's met all the objectives already. And so I just follow along with the order flow and see what it's telling. So we look back into the price action and look at, let's start with the hourly chart, and we can see what new inefficiencies have been formed. So we've created a BISI here on the hourly right there. If I go into the 30-minute, you can see we did an immediate rebalance right there on the 30-minute, and we're trading higher off of that. So at the moment, the order flow still points bullish, and we're likely to reach up toward this high up here. Okay. 15-minute chart, we traded down into the inefficiency right here, 15-minute BISI, showing nice respect for it still so far. So still at the moment looking toward the buy side. We haven't got any indication yet that we're ready to trade lower. And ES still has the weekly objective to meet up here. So we're expecting ES to trade into this high, 51.23.5. Okay, so if you have this entry here on ES or the 30-second entry from within here, both of those can be taking a partial at the buy side. Or this entry. That was another one right there. Okay, so still expecting NASDAQ to likely go and trade up to this high up here. Because we're seeing respect for the inefficiencies that have been established along the way. We're trading into them, and as we trade into them, we are creating new inefficiency back to the upside. So we're continuing that bullish order flow. So we traded down into the 15-minute BISI down here, and then we create a BISI there, and another here, and we trade through and close through this SIBI as well. So now we can expect NASDAQ to continue reaching up toward this high. and for ES to reach here. Carson, you in on this? Where'd you get in? Something tells me you had a buy in here. If not earlier. Late to the party, 18,173. Okay, that's good too. I mean, you've already got that new intermediate term low down there as well. If we look at the, let's go to 2-minute chart here. So short-term low, another low here, another short-term low. So we have the intermediate term low. This low, as long as we're going higher, should hold in place until we reach the buy side objective. So you can be a buyer here with price reaching up toward the buy side objective here, and the low should hold down here. So you can see there's plenty of entries. There you go. There's buy side met right there. And ES. Yay! It's happened again. The markets continue to do what they do. It's fun to watch this stuff, isn't it? Once you start building an understanding for where it should go, how it should do it, what it should and should not do, it's fun to see it play out. All-time highs, ES and NASDAQ. Really nice. 18,204.5 on NASDAQ. Wow. Guppy picked up a lot today. Awesome. Douglas, great session. Good. I'm glad y'all enjoyed this one. I'll make sure I get this uploaded to YouTube after. Well, now the objective has been met on ES. So at this point, we have to switch into a neutral bias and then just begin following order flow again. So you want to now go on ES and go back through your higher time frame charts. So go to your 4-hour chart and then work your way down from 4-hour to hourly to 30-minute to 15-minute to 5-minute, so on. And identify the inefficiencies and PD arrays that exist in this price range, where price can return to and then either trade through it and go lower or show respect for it and continue going higher. Okay, so we have nothing on the 4-hour yet. The 1-hour chart, nothing on the 1-hour chart. 30-minute, well, in just about 1 minute, you'll have a small inefficiency here on the 30-minute. So you want to note that as an area price can return into. And 15-minute, we traded into the 15-minute here before reaching up into buy side liquidity. Bob, NASDAQ was around 4,400 in 2014 when I first dipped my toe in trading waters. Wow. It's come a long way. Alan, if anything this week taught me to believe high time frame analysis, bullish in this case. I had my doubts. Insightful week for sure. Good stuff, yeah. And now you see from the times that we say it over and over and over again, your best opportunities, the cleanest expansions, the nicest price runs you're going to see are going to happen in the direction of the higher time frame bias. There's absolutely no reason to fight it. There's no reason to feel FOMO or any sort of emotions around not participating in some sort of downside move, because we're just viewing it when we're bullish on the higher time frame. We're just viewing all of those moves as manipulation. Okay? So we're not worried about the market going lower. We're not participating in the short opportunities. We're trading with the higher time frame bias. And then once again today, you've had a very nice clean expansion to the upside. Okay, buying opportunity in here, buying opportunity in here, and here, and here. There's plenty of opportunities. And you just start with identifying one, and then you build over time to have an understanding of where price can reach to, and then you can continue developing your trading and your trade management to a point where you can take this entry here, pyramid more in this entry here, pyramid more here, and pyramid more here, and sell it above the highs. And it all takes time. Wherever you're at in your trading journey is exactly where you're meant to be right now. And you have to stick with it and just continue pursuing it every day. Continue showing up and investing in yourself and taking the small steps to continue learning. Backtesting, finding opportunities where your model is present, when it works, when it works smoothly. What are the conditions under when you're seeing price action work smoothly? What are the conditions when you're not seeing that? And you're learning the times when it makes sense to be a participant or to not be a participant. Just one foot in front of the other. Small steps each day. And the learnings that you have from day to day are going to compound. And where you're at in a year from now is going to be a massively different place if you just continue to show up and learn a little bit every single day. All right, well, we're at all-time highs. I'm going to close out the session here for today. It's been a wonderful week watching price action deliver to the high time frame objective once again. I hope you've learned a lot this week, had fun on the calls, picked up something that you may be able to start seeing better or utilizing in your trading, and some things to continue studying as well. We got to keep that attention on backtesting, continuing to study, and learning the scenarios in which things are going to be better or not as good for us. Okay. I think we've had a good lesson this week in the first part of the week between Monday, Tuesday, and Wednesday of trading in the consolidation of when does it make sense to not trade. One of the most important lessons that you can learn in your trading journey is when not to trade. Not when you should be pushing the button, but when you should not do it. It's part of managing your expectations in the market, and it's part of managing yourself as the trader too. Remember, it can often be us that gets in our own way and causes the challenges and barriers in front of our consistency and profitability and success in the markets. And if you can learn to identify the scenarios and the times where you're likely to fall to those things, then you can create boundaries and rules for yourself to separate yourself from that and make an easier experience for you. It's just like we talked about yesterday with the gym analogy. If you're wanting to go to the gym and work out and get in better shape, you're going to sign up for a gym that's right around the block from you, not the one that's half an hour away. You got to make the experience and situation easier for yourself. That's the best way to practice discipline and patience in these markets. Okay, so I'm going to close it out here for today. Again, higher time frame bias is still bullish, so no reason to be shorting against all-time highs. Just look back into the range, identify where the high time frame inefficiencies exist, wait for price to retrace into them, and then if you see continued expansion to the upside, you can be a long participant again. If you see those inefficiencies being traded and closed through, then there may be opportunity to the downside. But our higher time frame objectives, our weekly, monthly objectives have been met on both indices. Now is a great time to switch to a place of being neutral. Just go to observing, tape reading, learning what you can, going back through old data. Use this week of price action to go back and do some testing. Identify where your model takes place. Identify the opportunities that you could have participated in this week and the opportunities where you would have done a good thing to sit out and not participate. Okay, so that's where I'm going to end it today. I'll get this uploaded to YouTube so you can go back and watch it from this morning. Stay safe, be responsible the rest of the day. If you need me, you can tag me anything in the chat, and we'll be back to it on Monday. Take care, y'all. Have a great weekend. Oh, Sunday call as well. Forgot. 10 a.m. Sunday call. We'll see you then.